Sound testing. No audio. Give me one quick second. Let me make sure I can get this. Amateur hour is here. Let me see if I can get something set up. Yeah, I can see no. Oh, we got audio? Okay, we're good. We're good. Thank you. Thank you. All right. Amateur hour here. And I'm alone, right? No Neil right now. Neil had a quick tennis game. He should be on. I just called him. He was coming out the shower. Happy birthday, Jose. Thank you. Thank you. Appreciate all the birthday wishes. All right. So we're getting audio. I'm gonna just do my comedy section for the next minute or two until we get Neil here, because I was with the little one and I don't have anything set up right now to kind of pull up. So I'm just gonna talk. We'll take questions. Let's have fun with the comments real quick. Um, I think you need someone to open for you or elevator music. I think I should. I think didn't I have wasn't there a timer? Didn't the timer had um didn't the timer have a music? Amit gained weight. He became Hispanic too. That's what ended up happening. Right? Complete race change here for Amit. Amit went Hispanic. Weird. So did Neil. Neil went Neil went from being European to being Hispanic overnight, over a few hours. Um, how old is my little one? He is 2. He is 2. So the terrible twos. Um, Mexican kid. Yes. Oh man. Yeah. So we're gonna at the end of the day, we're gonna do the Spanish word of the day, to see if we can actually do it. Um, you still adding CoreWeave at these prices? I do. I mean, I like CoreWeave. I'm adding anywhere below 100. I don't know where it finished off. Um, but yeah, I'm still liking. We saw from Nebius, right? The overall AI market is still pretty crazy. Let's see. Yo, you guys are funny. Um, I think Jose's smaller than me. I don't know. Is he pretty jack? Maybe I should. Maybe I know he's been going to the gym. I don't know. We'll see. Um, so what's going on? What's your price target? I just think it's a multi-bagger. It's very weird. I typically don't have a price target because I feel like it creates that horse race vision, where you're only looking at that price target. For me, I invest in the company and continue to look at it on earnings or whatever and kind of update. But at least for me, for CoreWeave, I believe it is still a multi-bagger. Um, Looks like Amit needs to partner up with you guys. I mean, he has me on almost every week on his channel, so I think we're pretty good friends. Except he hasn't invited me yet to show me his pretty cool new apartment. Even though we do live in the same state, I guess I'm not cool enough for him. Where's Neil? He should be joining. Supposedly, he had a tennis match. We'll have to find out if he won or lost. But he should be on in the next few minutes. Is this the market close? Yes, this is going to be the market close. We're just waiting for my co-host. Hopefully, he comes within the next 5 minutes. We don't have a cowbell to ring, but you will hear a special bell after when the market closes. But this is will the little one work? No, he will not work. He will work at Jose Media, Naharo Productions. That's my company, Naharo Productions. So he's going to be an intern at Naharo Productions, and is going to be one of the greatest semiconductor engineers or analysts this world will see. Hopefully. Um, Jose, if you were forced to trim your position into one stock, what would it be? This is crazy. I mean, this is a hard one. Um, can I pick an ETF? If I can pick an ETF, I think it would be a semiconductor ETF. If I couldn't, one stock, I don't know if I could ever go 100% in a stock. I don't know if I'll be able to sleep at night with one stock. Neil is rich now. Yeah, Nebius. I mean, tennis, that there's levels to richness, right? First, I guess is tennis. Then when you're playing golf, I think that's when you make it, right? That's when you're extremely rich. So Neil's getting up there. He's a tennis guy. Um, the chat is your new co-host. That's exactly it. That's what makes these live streams cool. All right. So let me just pull up some stuff really quick. Let's see if we can look at the heat map. Hopefully, we have my actual co-hosts joining really quickly. But let's look at the heat map really quick. Let me just share screen so we can see more than just my pretty face. Let's see stock heat map. All right. Look, this is yep. All right. So we're gonna look right now. Let me just post. Did anybody or let me know in the comments? Anybody got pretty excited with the Apple event? It seems the market wasn't too excited about it. We see down roughly 1.4%. It seems they introduced some new phones. Hmm. Uh, the ref, and that's how much I know about Apple right now, right? They released some new phones, right? Um, Refugee camp is here. We have about 2 minutes before the market close. I hope we get my co-host here pretty quickly. Jose, are you in BMNR? No, I am not. It's very rare for me to enter anything in the crypto world. Um, so it's not saying I will never do it. It's just not my forte. I'm pretty much in just AI semiconductor plays, be it cloud service providers, being infrastructure, be it the actual semiconductor. And now I'm kind of trickling down a little bit more into the software space. Um, but we can see Nvidia is up about 1.5%. Nvidia did introduce the new chip, which someone posted here. I can't find the comments because you guys are going pretty crazy already. It's kind of like a ASIC GPU, which I think is weird because ASIC and GPUs don't really match together. But here we go. AP Rubin CPX is the ASIC killer. I do believe I'm going to be doing a deep dive on this on my channel later today. But Nvidia did release something cool. What's going on, Renato? Momo gets money. Hit that like button for the algorithm, guys. I would appreciate that if you hit the thumbs up, subscribe button. I promise we are going to look at some interesting stuff throughout. We have some cool earnings. Neil hasn't joined us. It means he lost. He lost that game. If Neil is white or mid, does that make Jose is? Yes, I think so. I think that's the joke. How would you say Amit in Spanish? Amit. No. How would we? I don't know. Steve, what time? um, Jose, in it for the long run. Jose, while I got you here, what do you think about Iron versus Nebius? Iron might be too small for hyperscalers. So what do you think? I don't think the size matters right now. I don't think the size matters for these hyperscalers as long as you have the power. And Iron definitely does have the power. Yo, it's crazy. Oh man. um uh This is the real question, Ryan, right? It's Jose Brown or a Summit. Yo, you guys are hilarious. Ding, ding, dong. Ding, dong, ding, dong. The market is closed. We have, Neil, this is the great. Oh, man.
I'm not here for a couple of minutes. This guy is talking about size doesn't matter, ding dongs,
Oh,
amid.
man. Oh, this is hilarious. Um, but the market is closed. We do have earnings coming up in a bit. Neil, did you end up winning? That's the real question we have right now.
I'm wearing red as I'm ashamed of my performance. I'm ashamed of my performance. But that's because I stayed up too late yesterday. I mean, when Nebius is up 50%, I guess you can lose a tennis match. Who cares?
Yeah. Oh man, this is Neil's so glad to have you. We were just yo, the chat is hilarious. Yo, how does Amit do this with a straight face? Does he not read chat or anything?
I think he's just he's been through all of it. Doesn't phase him anymore.
The chat's slightly more mature. Oh man. But yeah, Neil, I mean, I know you're loaded now. You're out there playing tennis without us. You're late to the meetings. Did you catch the Apple event? Did you catch the Nvidia news? Did you catch anything happening in the market today?
I saw Apple has a new iPhone.
I like four, right? The Pro, the Pro Max, the regular, the Air,
Mini, the one that does work, the one that doesn't work. But other than that, no. What has happened with Nvidia?
So Nvidia released a few new things. They had like there's an AI infrastructure event happening today. I was looking to see if I could get the keynote view too, but it hasn't popped up. But they introduced a new AI chip. I still haven't read too much about it. It's called the Rubin CPX. It does seem like it's meant to be a chip that's and let me give you sharing because you typically do better at sharing and switch us over. Thank you. It does seem to be a chip that's mainly meant for like video models and video AI models. So it seems like they're also creating chips now that are more specific for certain workloads. So some people are considering it kind of like a ASIC killer. And we can see Nvidia was up a little bit on the day as well.
Yeah, 1.45%. Not bad. Nebius and Iron closed out very strong. Applied Digital as well. Nebius was at 87 at one point. So
yeah, you bought around there, right? In the when it hit to the 80s,
87, 88, bought a little bit, and then this thing started to recover. But yeah, all of them had a quite I just noticed now that United Health closed up 8.7%. So not bad. We saw Chris Patel had a huge win on that one. With
$1 million win. Wow,
yeah,
that's crazy.
AMD up 2.9. So I guess pretty good day in the markets. We have a couple of earnings reports. Oracle, Rubrik, Synopsys, all reporting in what, 10 minutes, 15 minutes, depending on.
I don't know if you saw when Apple, because Apple, I guess they're our AirPods. How did you know where I was going? How did you know, Neil?
No, because this happened before my game started.
And but how do you know that's exactly what I was going to talk about? Did I say Duolingo before?
You said
Duo, or you just knew?
And I knew where you were going with this.
This is wild. All right.
Because Duolingo was up 4%, and now they're barely up 0.8% because, again, translation.
Yeah, it was down a bit. It seems to kind of finish on the green there. I was surprised. But I think that's going to be the problem with some of these software companies, right? It's no matter how it may or may not impact them, just over time, somebody releases a product, you're going to see, bearish Duolingo, bearish Adobe, bearish GitLab, bearish whoever. And I think that's the kind of scary thing, not the scary, but the volatility that's going to come here with the software space in general. It's like anytime some random AI tool comes out, it's an automatic, it's game over for this company.
Yeah, and I mean, Chris from Data Driven Investing made a tweet earlier today or yesterday. It's like, why should I learn to play an instrument if I can just listen to music on Spotify? It's like, why learn a new language if you have Google Translate? It just doesn't make any sense. Like two different types here of target audience, I'd say.
Yeah. Lourdes, I don't know what the Broadcom news were. If you mind sharing, I didn't really see anything here. And Oracle is up about 3%. It does seem like earnings are out. So if we can pull up Oracle here, Neil, and come on, one day we got to look at like the minute chart or something, Neil.
Okay, we will look at the minute chart. No problemo. We can do everything here. We talk stocks, we talk sports, we make jokes. We do everything on the show. Voila, minute chart. 2 big green candles. But you said previously size doesn't matter. So it doesn't matter if those are big candles or small candles.
What was I talking about when I mentioned that?
You tell me.
Man. Well, if the chat could remind me, well, the stock is up about 5%. Oh, I remember. I think it was with Aaron and the power capacity.
Yeah, sure. Sure.
So Oracle up about 5%, 254. I'm trying to pull up the investor website, see if we have any news there already.
Synopsys is out. Synopsys is out, and it's a double miss. It's a double miss. Let's see, CNPS. So your minute candles down and up. We do have a more Microsoft news actually.
Microsoft good news?
I think so. Microsoft to buy AI from Anthropic in partial shift away from OpenAI, according to the information.
I mean,
you're very welcome.
I mean, I think you would expect them, right, to just play with all different models. I think at the end of the day, you just want to have the selection of what model you choose. So is it really bearish? I don't know.
And Oracle is making some moves here.
I can't see their thing. I mean, the freaking short any stock that can't give you their, like, if everybody else knows, why can't it be in your website already? You know?
Let's see if I can find it, because apparently you cannot. Oracle. No.
Did you find it? Exactly. See?
This is a strange thing.
But what does Twitter say? Do we know? Or X, sorry, X. Oracle earnings per share of $1.40. Estimated was 148. Revenue was 14.9. Estimated was 15. So it missed on both ends.
But
let's see. We signed 4 multi-billion-dollar contracts with 3 different customers in Q1. This resulted in RPO contract backlog increasing 359% to, guess what number, Neil? Just guess. Guess what number?
Quarter over quarter or year over year? What did they say?
Increasing 359%. They didn't say year over year. They were at $140 billion. Where do you think we're at right now?
I don't know. I'd say probably something crazy, because by your reaction, it's probably something like
$455 billion. 455.
Well, no, technically, I should have gone much higher, because last time they grew that 40% year over year. So to grow now 300 and something, 400.
There's no way. No,
this is
I guess
insane.
Now we got that. This is the Stargate being, I think, obviously being added into.
Yes.
But that's wild. And over the next few months, we expect to sign up several additional multi-billion-dollar customers, and RPO is likely to exceed $500 billion. There's no way.
So much for.
Am I not bullish enough? Am I not?
Okay, maybe it would be better if they actually posted their results on their websites.
Yeah, then I would be more bullish. But if they can't do that, this can't be real. I'm pretty sure it's real, but that's wild. That is wild. Holy baloney, or whatever I could say.
I don't get it. Why? Where do people get this information if it's not from their websites? Like, I'm refreshing this thing like a crazy person.
Obviously, now the question is going to be, I hope they ask during the Q&A session, how is the RPO going to be distributed, right? How long is this? It's like, because they usually give you like 50% is going to be taken out before the first 20 years. I said baloney, not holy baloney. I said holy baloney.
This is turning into an after hours plus 18 type of live stream.
This is wild. Maybe I don't know. This was they are lying and taking advantage of hype. I'm gonna guess Oracle is also gonna start to make these deals with these. If they really do have $400 billion in RPO, they're gonna start making a lot of these co-location deals as well. They have to. I mean, if they want to meet this demand,
choice. Yeah,
they have to. Yeah.
In the meantime, Rubrik also reported a double beat, earnings per share of loss of 3 cents, revenue $309.8 million, a beat by 10%, and EPS beat by 91%. So pretty nice beat there, but the stock is all over the place after hours.
Yeah. I ain't gonna lie. I mean, Neil.
What did you say?
I was just reading chat. I think Oracle and that number is going to be on my mind throughout the whole day. That's it.
I missed the super chat apparently.
Oh, you missed the super chat. Wild, rude of you. So rude of you. Yeah, Oracle's RPO 455 billion, $500 billion by the next few months. This is wild.
This is expect Oracle cloud infrastructure revenue to grow 77% to 18 billion.
Is GameStop also reporting today?
Yeah, the famous GameStop. I think so. Let's see what is it? To the moon?
GameStop. I don't know. Do they have anything AI? To the moon, it seems. A little bit. Can we also see, it seems, I just want to see if any Neil finally arrived from his tennis loss. I don't think so.
What do you mean you don't think so? Am I not here?
I didn't think he lost. Even though you said he lost, I think you're just being I
know I lost.
But yeah, how AMD and Nvidia, are they reacting anything to this Oracle news?
Let's see. AMD is.
Thank you, Charles. I appreciate the super chat.
AMD is up a little bit, yeah. After hours.
Do you have Micron? It seems it's finally in Oracle's earnings website. Neil, if you want to just search that up really quick.
Yes, sir.
I really want to read this.
Yeah, finally. Okay.
Wait, did you see it? I didn't see it. Lame.
Yeah, it's not on the updated. It's in the link below. It's
like, got it. All right.
Let's not be. They can like have $500 billion of RPO, but a website that's up to date, that's too much to ask.
Too much, way too much to ask.
So yeah, you read this. I have to go and find Venom's super chat because I don't know. I don't know why it didn't pop up.
All right. So first, we're seeing that Q1 revenue, remaining RPO 455 billion, up 359% year over year. This is a company that does have kind of a little bit of a slower. It has like outdated revenue is trying to leave and then it's trying to grow with the cloud infrastructure. So that's why you usually see total revenue not up much. Total revenue was only up 12% year over year, but you are seeing kind of the cloud infrastructure, that IaaS infrastructure as a service revenue up 55% year over year. Now, what else can we see? We signed 4 multi-billion-dollar contracts with 3 different customers in Q1. This resulted in RPO contract backlog increasing 359%. It was an astonishing quarter. We did talk a little bit about this. The scale of our recent RPO growth enables us to make large upward revisions to cloud infrastructure portion of Oracle's overall financial plan. We'll be presenting details. All right. So one thing that I expect to happen, and I don't know if Neil left because I'm reading here, but today I think we might see a nice increase in capital expenditure. So I do think we are going to see growth in CapEx for it. So for them to kind of meet with this demand, CapEx has to grow. I think last time they talked about 25 billion for the year. I think that number is going to be much, much higher. Let's see what else. As a bit of a preview, we expect Oracle's cloud infrastructure revenue to grow 77% to 18 billion this fiscal year, then increase to 32 billion, then 73 billion, then 114 billion, and 144 billion over the next 4 years. Neil, are you able to, Neil, did you see that? Scroll that a little bit if you're able to, so we can see that portion. But right there, does second to last paragraphs, they kind of talk about how they expect 18 billion this fiscal year and then increase to 32 billion, 73 billion, 144, and 100 billion over the 4 years. Most of the revenue in this 5-year forecast is already booked in our reported RPO. Oracle is off to a brilliant start to fiscal year 2026. That is wild. They're going to need massive. Matthew, me and you too. Me and you both. I think this is wild. I'm really shocked by. I thought the AM market was big. I didn't think it was going to be this crazy. Everything points to us being early. Actually, I think so. I mean, I think, and like we talked about it, I think we're going to see more deals on this.
This is crazy. Did you see this?
There's no way this is.
What the heck is this? Multi-cloud database revenue for Amazon, Google, and Microsoft grew at an incredible rate, 1,529%. How is this real?
How? I'm sorry for the viewers, but this is. I've always thought Nvidia's up about 1.7% after hours. AMD is up about 1.4%.
This is
it's
this is something.
Yeah. I wonder what I don't even want to look at what the suit heads are saying, but
check if someone's talking about it on maybe a CNBS BC. I mean, I said yesterday, I think unless it's something crazy pops, they report something
I didn't think
crazy.
It would be this crazy.
Yeah, me neither.
I thought it'd be like RPO of like 190, 180.
Yeah, like Broadcom numbers were good, but this is this is something else. This is a complete blowout, and this throws out every the capex cycle is at the end. Yeah, sure, okay. Tell that to the $500 billion here.
Yeah. So they didn't talk about again during the earnings call what's going to be crucial. I think it's going to be more about capital expenditure. Like I mentioned, 25 billion is what they projected, but if they're seeing these type of growth, they need to do something. Are they going to announce a deal with CoreWeave, Nebius, or Iron, or one of those in the next week or so? In the next few months, I think it's highly possible. So CapEx, they're going to have to announce deals with allocations, and yeah, off to a great start. I'm pretty happy. I would love to see what the chat is thinking right now.
In the meantime, Roberto here, because I couldn't find for some reason the Venom super chat didn't pop up, but this was basically his question, which again is Credo, because I think we talked about Credo this morning.
Yeah.
Which is basically this.
Tyler's thoughts on Credo, but different mix of chiplet cells versus not sure. We talked a little bit about Credo, right? I mean, I don't think any of us are following this company right now. I think in the upcoming days, I wanted to do a little bit more research on this in Astera Labs, just for more understanding the market per se, but not really for an investing prospect right now for me.
Because both have been doing extremely well, right? I think over the last 6 months, Astera Labs is up 250%. Credo is up, I think, about also 277%. So there's definitely some momentum with this company. With these companies, I mean, Astera Lab last quarter was incredible. I think they blew the estimates out of the water. He does say here that Credo Technology HQ is in the Cayman Islands, so maybe there might be some shenanigans going on there, but I don't think so. Again, we will have to look into it a bit more, probably in the next couple of days, because these two names do pop up quite a lot during the live streams, especially over the last couple of weeks.
Yeah. And I just got to post something really quick. So if you want to take some questions.
Yeah, go ahead. First of all, thank you, George, for becoming a member of the channel. And again, Venom, sorry for not noticing the super chat previously, but we will definitely come back with some more useful information on Credo in the coming days. But yeah, these numbers from Oracle are insane. So let's have a look at what some other semiconductor stocks are making. So Micron is up after hours. AMD is up after hours, almost at $160. Nvidia is also up after hours after these results. I believe Nebius should be up. Nebius is up after hours. Iron is up after hours, 2-3% or so. Applied Digital, basically anything AI, semiconductor, data center build out is up after hours after this incredible report from Oracle. I mean, this is insane. Synopsys is down. Synopsys is down on a double miss. They're down, let's see, 10%. They're down 10%. Rubrik, which is in the cybersecurity space, they are, I mean, this is too wild. This is after hour. Look at this. Nothing. Up, down, up, down, up, down, up, down. And now we're basically flat. We're basically flat. So maybe the earnings call is where they'll provide a little bit more information. And unless they are yet to report, and these moves were just whatever, Oracle moves. But Oracle right now is up significantly. How much is this? 20%. Wow. Oracle is up 20% right now, which I'm not that surprised.
No, I mean, you're telling us in 4 years you're going to have a $144 billion annual revenue on your clouding business. Obviously 4 years is pretty far off, but what's the market cap of this company? 700 billion, 800 billion. So now, even on that, it's I can see why the market is still very, very excited. And I think we're going to get a lot of upgrades tomorrow or in the upcoming days for not just, it's just not only going to be for Oracle, throughout everybody. You're going to see this type of bullish sentiment. Now, the question is, why is this one able to grow so quickly while your AWS and your Microsoft and all the others haven't seen? Is it really just that RPO from all the different kind of Stargate projects with OpenAI? And this also kind of makes me, as a Microsoft shareholders, is this like, did Microsoft drop the ball by not being the core Stargate product for OpenAI? Because if this is mainly from the Stargate project, Microsoft had the opportunity to spend this type of money to be that person for OpenAI. So did Microsoft drop the ball a little bit here? Maybe. If this is definitely all coming in from Stargate.
They also say here, we expect multi-cloud revenue to grow substantially every quarter for several years as we deliver another 37 data centers to our 3 hyperscaler partners for a total of 71. I mean, this is, it's Amazon, Google, and Microsoft, right?
Yeah, I mean, the other 3 hyperscalers, they like to be the fourth. Tom Asher definitely grew very fast. I have to relook at the RPO for all these other numbers, for all these other companies. But definitely, I think this is the biggest out of all of them.
I don't think there's a company with a bigger remaining performance obligation.
And this is, never mind, I'm not going to say it.
This is, RPO contract backlog increasing to $455 billion. I don't think anyone comes close.
And like I said, I think this is going to trickle down really quickly to the rest of the market. I mean, you're already seeing your Nvidias and AMDs up, but we know for them to build up this type of infrastructure, they need power. So we're going to start to see some type of deal with co-locations, either your Nebius, your Iron, your CoreWeave, whoever out there. So I think Oracle is going to start, if they don't announce them today, they're going to announce them throughout the upcoming weeks.
I mean, I'm reading this again and again, and it's quite something. It's quite something. But it's interesting, though, because they said here we signed 4 multi-billion-dollar contracts with 3 different customers in Q1. So, because Stargate projects were announced, way earlier. So, do they only recognize it right now? Because only in Q1 did they sign the contract?
Yeah, and I think that's why the RPO wasn't included in them. I don't know how it works or what. It's probably in their 10K report. How they consider the RPO process. But for the past, they've mentioned RPO does not include any Stargate. So I don't know if maybe in there was some part of the contract that Stargate first they need to have some data centers up and running before kind of like the full contract could be signed or something. So there might have been some clauses there that kind of prevented them from doing it. I forget what were the different countries that we saw our Stargate national kind of built up. I think one was UAE, but there were some other ones that they announced. Stargate.
Saudi Arabia is one or not? Or they have something else?
Let's see. So the UAE was one.
Yeah.
Did they do one in UK? Stargate UK, was the UK one of them? No. Let me see. Stargate. Look, I forget what they called it. Stargate Global.
That's.
I'm just trying to
is
see.
Also up a little bit, not by much.
So Stargate UAE was that one. Is that the only one they announced? Was I dreaming of the other one?
Right. Stargate Oracle. Let's see if we got something. Yeah, in Norway. OpenAI to launch. No. Yeah.
No.
Norway. OpenAI to launch AI data center in Norway. So yeah, they said this at the end of July. They plan to launch Stargate Norway.
And then they expanded their one in the United States as well.
Yeah, a couple of smaller ones.
Yeah, they expanded. So But I guess there were just rumors then, because I did see like there were other places that were kind of thinking about the Oracle news.
But I don't think that the Norway one is with Oracle. From what I'm reading here, it's with in partnership with British AI cloud infrastructure provider Nscale and Norwegian energy
Scale. Okay.
infrastructure firm Aker. So
Either
it's
that
not.
just the Stargate one US is just huge within itself, and the UAE one. But again, this is I'm really curious about this earnings call. Again, it's even if you don't own Oracle, it's extremely bullish for the rest of the AI space. I mean, we have CoreWeave up about 2% on this. We have Nebius up about 0.7%. Iron is up about 3.3%. So the possibility of one of these getting a new deal with, or all of them, it's even possible for all of them for this type of infrastructure and RPO demand is possible for all of them to get some form of deal with them for some co-location, some power shells, from some GPU distributions.
Yeah, because I mean, it's so much money that they'll have to. That's also the question. Like remaining performance obligations for most, there's like short and long term. Like in the next 12 months or in the next 12 to 24 months. So which one is it here? We do know that.
Well, I think they break it down. We can see it with the revenue. Neil, I think they broke it down there where so right now we're what their fiscal year of 2026.
This is Q1.
Yeah, so they mentioned for this fiscal year, they expect revenue to be $18 billion. Then it's going to jump to $32 billion. Then it's going to jump to 73. Then it's going to jump to 114, and then 144.
Over the subsequent 4 years.
Yeah. So 18 this one, then year 1 would be 32, year 2 would be 73, year 3 would be 114, and year 4 would be 114 billion. So I'm pretty sure if we add these numbers up right now, it would give us that 400. Let me see. Let me just do a quick calculator. 144 plus 114 plus 73 plus what was the other one? 32 plus.
You reach 381.
Yeah. So then at least it seems at least 80% of this backlog is happening within the next 4 to 5 years.
And then there's $74 billion.
Those left over. Yeah.
But then again,
I also wonder if they're also just basing these numbers on the infrastructure they think they can build out safely, and any kind of deals that they could get via co-locations or something like that can help expand that revenue growth even more. Because I think these are just projections on what they might have on their layout plan. But if they announce a partnership with somebody else, it allows them to collect that RPO a lot faster. So I wonder if that part is not included just yet.
Do you remember? I want to check the number that they gave us the last time they did an update. Right, the last time they jumped. Let's see, 2028.
So it does seem BE is the one helping. It seems to be helping Oracle with energy, and this is the one that's up right now.
Yeah, so remember back in June, they said that they signed a single cloud deal worth $30 billion in annual revenue expected to start flowing in fiscal 28. So two years from now, $30 billion from one.
So that'll be that $73 billion year, I guess, right?
So this is this one. This is the next one. So 73 is this one. So 30 out of the 73 is just one.
Yeah, that is wild. And then I'm pretty sure that's going to grow more. That's going to be probably 40 or so for the 114 one.
These are some crazy numbers. Crazy. Did you find anyone talking about it?
Oh, I'm sorry. I was just can you guys repeat one more time why Oracle is soaring? One more time.
One more time.
Their RPO grew dramatically. It grew 350 something percent to 455 billion. They expect to get their Oracle Cloud Infrastructure revenue to 114 billion within the next 5 years. If you start right now, right? Yeah. So yeah, within the next 5 years, expect cloud infrastructure to be $140 billion business. Now, again, this is also bullish for the cloud, Neil. I mean, if this Oracle can grow at these levels, why can't AWS with its Anthropic grow at these levels? Why can't Google with its Gemini grow at these levels? Why can't Microsoft taking some of the stuff from OpenAI grow at these levels? So, yeah.
Google is actually flat after hours.
Yeah, I mean, I think right now the market's going to be like, why didn't you kind of show these numbers as well? And you might kind of see some you might start to see some bearish sentiment in other cloud players. Yeah, I just posted that tweet showing this. This is insane.
This is crazy. This is like the first Nvidia monster quarter.
So what does RPO mean? Remaining performance obligation. So it's a company can say, hey, look, I need to have this much compute rented out for the next few years. It's kind of like deferred revenue. They kind of subscribe to it. Now Oracle just needs to provide that revenue. So it's backlog pretty much. It's an insane backlog. This is this is a whole OpenAI valuation has a backlog. Very true there. Must be one extra number in the backlog. It was wild. Again, when does this earnings call start? Neil, this is, I know we have other earnings, but this is if you are an AI investor, this is all you should care about today. Yesterday was the Nebius news, and this is today. I wonder what we get tomorrow. We better get something crazy tomorrow.
I think there's nothing tomorrow.
And we better get it has to be a crazy week. All right. It has to be
4 p.m. Central. What does that mean? It's like 23 minutes?
I don't know.
What do you mean you don't know? It's your time zone.
I'm Eastern.
You're Eastern.
Don't be rude like that, Neil. All right, don't be rude. I know you're a Nebius millionaire now. Let's just calm it down a little.
You put so high expectations on me.
But Synopsys, yes, Synopsys is down. It seems 10%. So that might be something to look at in a bit.
Where is this? Their website is quite confusing. Here it is. No, they still, I'm on Oracle's website, and it still has like on the top Q4 fiscal 25, 4 p.m. CT. 4 p.m. CT is 22 minutes.
Okay. So Jose, do you reckon why Nvidia has moved higher after hours? It's just this. I mean, it's kind of a strong indication of the AI space. Oracle is not exclusively using Nvidia. It uses AMD as well, but both are up on this news. If Oracle needs to, if you need to fulfill this backlog within the next 4 to 5 years, you need to build the infrastructure to do it. There's no way around it. It's not like so you need to build that infrastructure, and that build infrastructure is going to be massive AI data centers.
Yeah, I wonder if they'll mention NVIDIA AMD in the call.
And I just want to say, they usually do, right? You know, Oracle, SmackDown, Oracle doesn't exclusively use NVIDIA. I know they're probably one of the biggest
AMD.
They have one of the AMD clusters in the world right now. They're expected to build one of the biggest ones for the MI355. So there's, I agree that there should be some excitement here for AMD as well.
Let's see, Micron. It seems dramatic with all of these candles, but it's barely $1. It's barely $1. Is Nebius? Most of the Nebius and things like that are giving up a little bit of their gains. Iron, same thing. Applied Digital, same. I mean, I'm not going to complain with Nebius not being up 10% right now after being up 50% in a day. But yeah, this is like Nvidia.
The question for me here, and it was the same question, kind of like with Nvidia. I didn't sell, right, Neil? But it's like, where can they go from here, right? But I guess that's what I most likely also thought with the RPO at 150. Like, is it possible for? I mean, they mentioned a $500 billion by maybe next quarter, but like, does it just keep going? Like, do we see next year somewhere of an RPO of like 600 plus, 700 plus? And Matthew, I agree. The number is absolutely mind-bending.
Are you a earthbender, waterbender, firebender, or air?
I'll be a waterbender, I think. I don't know.
Huh, interesting. So you would.
What was the right answer? Excuse me. What's the right answer, sir?
No,
You seem disappointed.
no, not at all. Just interesting. Which one would you choose from the 3 starter Pokemons? You answered this question already once.
Yeah,
so.
Squirtle.
Okay, so it makes sense.
What would you be, Neil? What would anybody here be now?
I take Charmander. So Firebender.
Oh,
I like fire. No, I fire for sure. I did burn my finger when I was a kid because of fire, but it taught me not to play with fire. Although I love fire today, so maybe I didn't get burned enough. But we do get burned with stocks sometimes. Badoom.
Diogo here is CoreWeave a partner of Oracle. 3.2. I don't think so. I don't think they have. The only kind of correlation you can kind of put with Oracle is OpenAI is a partner with CoreWeave, and then Oracle is part of the Stargate project. So there could be some, I guess, easy way around there. But I think it's more just a general flux of they're gonna need more compute. Darth Vendor, that is nice. I think it's Chris with Chris. It's more about just the demand for AI infrastructure is crazy. Jose and Neil need to start in a body cop movie together.
Rush Hour 6. What the heck is this? What happened to this?
Because you're looking at the minute chart and it took a hit.
Because this one makes sense. Synopsys is like Synopsys. No, obviously it's not in the.
Yeah, this is the real question. Yesterday Nebius, today Oracle. What's next? Tomorrow, this week has to do something. It has to be every single day.
Adobe is going to go crazy.
Flip it, and if we're right, well, if Neil's right, we'll see tomorrow.
Thursday.
Thursday. So I said tomorrow, Neil. You have to listen.
What did you say? This is actually a pretty good one. This is a pretty good one.
Oh my God. I'm ashamed of myself for forgetting who that was.
I love that character.
All right, back to stocks. I mean, we can pull up some. Let me look for. All right, so now let me look at some CNBC stuff real quick. CNBS stuff real quick.
Quick question for the hosts. What are your biggest holdings in your portfolio? I'm coming from a MITS channel, so curious where you guys investing.
Yeah.
I'm big in SoFi, Nebius right now, Google. In the core retirement portfolio, I have Meta, Amazon, Mercado Libre, and Tesla. But in the one you can see every Sunday, actually, it's SoFi, now Nebius, Google, Rocket Lab. I think Micron is now number 5 or 4. And Jose is the NVIDIA king. He has like 1,000 shares or something.
Okay. Yeah. So for me, my number one position, like 30% of my portfolio is Nvidia. Um, what I'm making a really big position in my portfolio right now is CoreWeave. I'm pretty excited about CoreWeave. Google for like kind of like my safe play. But I think in any in at least 50% of my portfolio is within those three companies right now: Nvidia, CoreWeave, and Google. Um, I'm buying a lot. I had bought some more CoreWeave. GitLab is also big in my portfolio too. I don't know if I would consider it to those levels yet though. But GitLab, and my top five, then I would say AMD. I think those would be my five biggest positions in my overall portfolio. But Nvidia trumps everything, followed by now CoreWeave. Yeah.
Earnings season went so well for us that we got the billionaire laugh.
I wish.
You already got married. I still have to get married, so maybe I'll have like $1 billion wedding. I will have to sell shares. That will be like public thing.
That would
Lil
be,
sells shares, stocks go down. Insider selling.
We're gonna need a bigger boat.
I watched that movie not so long ago. But let's see. Let's go back to stocks. Did you find any suits?
Oh, sorry. Man, the comments are funny. Sue me, Neo. Just don't really. All right, let's go to CNBS. Let me look. All right, so let me look. You find some stuff, Neo.
I did not find some stuff, but okay.
No, I mean like you distract the viewers while I find.
Yeah, no, I know what you meant. GameStop is up 5.2%. Man, those minute charts really do deceive you. Like when you look at those candles, like, wow, this thing went up so much, but actually it went up like $1. $1. But that's about it. What is my favorite PayPal doing right now?
This is on all things AI. He's widely considered one of the top experts on AI on Wall Street. He joins me here now. George, it's great to have you.
Morgan, great to be with you.
I got to start with Oracle. Last I checked, those shares are up 20% right now. This astounding RPO number up 359% year over year, almost $500 billion now. How does it speak to what we're seeing in AI and I guess the shifting landscape in terms of leadership positions?
Well, it's certainly an extraordinary market event for a company of that scale, for sure. I think it just reflects this situation we find ourselves in where the infrastructure boom is so profound, and yet we find ourselves in a moment of capacity constraint. There just aren't enough compute cycles to meet the demand for tokens in the world. And so Oracle's booming business, the booming business of all these hyperscalers, they're delivering these computational cycles. It's just a commentary on what we see in the kind of demand and consumption profile of intelligent tokens.
How long and how sustainable is this spillover effect when we talk about capacity constraint for the Oracles or the CoreWeaves or some of the others of the world that are taking on some of this capacity that the hyperscalers themselves can't handle right now?
Well, that's obviously the $1 trillion plus question. There's no doubt. And I think it's a consequence of will this demand profile maintain the current trajectory, the steep trajectory that we're on? How quickly can we deliver these cycles? And what other constraints may come to bear? I'm sure we'll talk about energy, which is emerging as one of the principal constraints here. And I think it has a lot to do with whether and when we'll find product market fit for these AI technologies within enterprises and with consumer use cases. We've seen great early progress, but that has to be sustained and accelerated, I would argue, to meet the moment of all of this spend.
So let's talk about it, because you spent a lot of time focusing on it. You've written papers on it, but this intersection of power and AI, where are we at in terms of that cycle, that build out, what needs to happen to fulfill the energy piece of this more quickly?
Yeah, as I said, it's really emerging as a principal constraint for the ability to deliver the infrastructure that produces these intelligent tokens. And that's in many dimensions: generation, transmission, supply chain, human labor. Actually, we're running short of electricians that are capable of delivering this kind of power. And I think there are two principal things to remember here. One is like your father's cloud data center was architected for 5 nines of availability and very low latency because all of us abandon our shopping cart in 0.6 seconds. Second important thing to remember is that we build power in this country for peak demand, those days where it's 100 degrees in New York or Houston or whatever. And thinking about those two foundational elements, we're arguing that there is a way to brook that temporal gap. I mean, this ultimately, we will produce enough power assets, we'll upgrade transmission so we can meet this moment. But right now, there's a bit of starvation. Our belief is that the ability to think differently about the availability of these AI data centers is going to be a big difference maker. There's a paper out of Duke that talks about the ability to curtail workloads. So in those moments when it's 100 degrees in Houston and that power is required, you can manage down the demands on your AI data center, operate at 3 nines of availability, slightly lower latency, and therefore take down those workloads and then harvest the electrons that happen during more of the slack period. Now, Duke argued that there's some 75 gigawatts of power that you might be able to harvest from this workload discrimination and demand response. We think this is a really interesting way to brook this divide. But make no mistake, there is going to be a long-dated, persistent investment cycle in power necessary to power this revolution.
So basically, the data centers themselves become smarter, and we know there's a whole startup ecosystem that's focused on this right now. So I am curious, because we had Ali Ghodsi from Databricks on the show yesterday, and he talked about the fact that maybe there's been, at least initially, overexcitement, overspending, overinvestment on the promise of AI, and that seems to be coming back down to earth. But simultaneously, what he's seeing right now is that there is more adoption, there is more realization, at least the beginning of realization of return on investment. What are you seeing from your key vantage point, especially as many of these companies are starting to come public?
Yeah, well, Ali's obviously a super informed and very balanced observer, so I take super seriously what he says. We have found product market fit in the coding space, engineering and coding, and we find that at Goldman Sachs. Our engineers are using these coding capabilities and agents to produce more code. We found product market fit in customer support. Mark Benioff talked at length about that in his most recent earnings call. I would argue we found it in the advertising space. And I think it's going to be a steady, slow accumulation of use cases that consume these tokens in the enterprise. There's a great paper out of Princeton that exhorts us all to treat this as a normal technology. While it has its magical qualities, it's a technology where the diffusion will be slow. Enterprises will take time to find product market fit. We'll have to change our habits as workers. We'll have to shift our workloads and our workflows. All that's going to happen. It just may take a little bit longer.
All right.
Did you see this?
What did I see, Neo?
Google Cloud forecast $58 billion revenue boost by 2027. Google Cloud Computing Division has up to $106 billion in commitments from existing customer contract that has yet to fulfill.
CoreWeave, that's wild. Wild there.
They're not $50 billion last 12 months.
CoreWeave CEO was also just in CNBC. Can we play that one real quick?
Of course.
Thank you. I appreciate it, Neil. You're the best.
Thank you.
Come on.
I checked. Shares of Oracle were up 20%. It speaks to perhaps this capacity crunch we're seeing more broadly in the marketplace for AI capabilities. How is it affecting you?
Yeah, look, the move in Oracle that is being driven by their backlog to deliver compute, other deals that have been announced within the last 24 hours, all of this is really just a reinforcement of the way that we have been building and focusing our company on being able to provide the infrastructure for a group of companies that are virtually insatiable in terms of their demand for compute. And you're seeing it across the space. It is really an incredible commentary on the macro environment that we're building our company.
Yeah, and of course you just mentioned other deals in the last 24 hours, the Microsoft deal with Nebius getting a lot of attention as well. I want to get your thoughts on that, especially since Microsoft is a key partner of yours.
Yeah, look, it's a great deal. It's a very large scale transaction, and it is once again a representation of the size and scale of the demand that we're seeing across the space as the most important companies throughout the lab community, the most important companies across the cloud and AI native communities are trying to get the infrastructure that's required to be able to drive the potential of what AI is going to be. And it's just really like I said, it's an incredible representation of the macro environment that we're operating in.
What does it take for CoreWeave to get to a place of meeting the capacity, having the capacity to meet the demand? And I guess just as importantly, when there's so much money and capital being raised by so many different companies right now, is there capital for you?
In accessing the capital markets, we've been groundbreaking over the last 18 months. We've raised in excess of $25 billion. We have a great team that coordinates accessing the debt markets as we bring in successful transactions to be able to build the infrastructure to deliver to our clients. They depend upon us to be able to do that, and it's really been one of the engines of success for our company. What the market is really internalizing over the last couple of days is just something that we have been trying to communicate. I guess sometimes I'm good at it, sometimes I'm bad at it, but just the companies that are building artificial intelligence, that are building the foundation models, that are integrating these models into the enterprise business community, they just cannot get enough compute to be able to serve their clients, to be able to train their models, to allow artificial intelligence to drive their businesses forward. And with that behind us, with that tailwind, we are really well positioned to take advantage of that across the capital markets, across the infrastructure markets, and with our partners and clients.
Yeah, and speaking of partners and key investors, Nvidia, you've started to already see some of those first GB300 racks from Nvidia.
Yep.
Should we expect that to ramp here in the final months of the year? And what does that mean for this capacity?
Yeah, look, we work very, very closely with our suppliers. We work very, very closely with our clients to be able to deliver infrastructure. And the ecosystem at large really does depend upon our ability and others to deliver infrastructure at a scale that allows the building to continue at a pace and magnitude that the world is moving right now. You are going to see massive scaling of infrastructure as we move through Q3 and Q4, as we bring on just phenomenally large blocks of GB200s, of GB300s, as we bring on the networking required to make this compute function effectively, as we deliver storage solutions. It's really exciting. It is a moment in time where the size and scale of what's going on is just sort of mind-boggling.
So how does this new venture arm fit into this? Especially since I would imagine it allows you to not only seed the startup ecosystem, but also potentially cultivate future customers and gives them access to some of this capability.
Yeah, you're really hitting on a lot of it, right? Like the idea is that for the environment to be healthy and robust and resilient, you need to be able to allow new companies, new entrepreneurs, brilliant technologists of the future to be able to bring their ideas and turn them into companies, turn them into startups, turn them into the technology of the future. And in order to do that, they need to be able to get access to compute. And by partnering with them, by working with them, by investing in capital, by investing in access to compute, doing all those things, we can wrap our arms around them and help them and help steward them through what is a tenuous component of the entrepreneurial journey. I know this well. And so, we're really well positioned to pick these companies up early and to help them as they kind of begin to establish themselves as important components of the future of what AI will deliver, whether it's on the application layer or it's anywhere else within the ecosystem.
Okay, and of course, markets like it. Stock finished up 7% today, up another almost 5% as you're talking right now. Mike and Trader of CoreWeave, great to speak with you.
Thank you so much. I really appreciate the opportunity.
Well, that does it for me here too.
All right, Neil, pass it over to you.
So apparently, a lot of people are interested in this stock right here. I don't know which one. Have you heard of this thing?
Nope.
It's called Grinder. Says it's the most trending ticker here in chat for some reason. I don't know what you guys are doing with the with the usual Amit, but but this is this is it. This is it.
Oh man, you are wild, Neo. You are wild for listening to the chat.
Yeah, I mean, you told me I had to entertain people and distract them, so here we are. I wanted to pull up something else, but I said, forget about it. We're going to get banned here.
Pull up the earnings call instead. I need to
have
go.
the music in my
all right,
headset.
I'll be right back. I need to go. The wife came in, and I need to go see the little one really quick. So I'll be right back.
Okay, it still hasn't started, so I'll put it up when they start talking. Plus the first, anyways, 10 minutes or so is just them reading stuff. But there was something. First of all, I can't remember who said that on TradingView I can have a heat map of the after hours action. If you're still watching, please let me know how we do this. I don't know how you do this. But yeah, I see. I caught everyone's attention with that one. Okay, now I see what I need to do to get chat's attention. Noted. So CoreWeave is up nicely after hours. Someone did. Wife came in and heard Neil talking about Grinder. Yes, indeed. Jose got that notification. Like, what did I just hear? Thoughts on Grab? Grab, I mean, I said that Grab is a very good company. I think the expectations of it were maybe a bit misplaced. Still growing, but it will take time until it will reach like $100 billion in market cap. Earnings call is starting, but they're I have it in my headset. They're just reading some things at the moment. I'll pull it up once they start talking about the financials. But yeah, other than that, it's quite. We're in September, so we were supposed to crash and burn, but that didn't happen. That did not happen, at least not yet. Tomorrow we do have a CPI report, and then we have a PPI report coming up. And next week we have the Fed meeting. So we'll see what happens with that one. But so far, it seems like
still music, Neil.
It's just the investor relations guys talking about all of the statements, blah blah blah. So in the meantime, I just answer some questions, but I have him in my headset. It's quite crazy how we're still super early right now.
Wi-Fi. I think this is another kind of PowerShell company. I mean, in theory, it could benefit. But thanks for the super chat.
Significant cloud contract with the who's who of AI.
Let me know if the sound is good.
XAI, Meta, Nvidia, AMD, and many others. At the end of Q1, remaining performance obligations, or RPO, now top $455 billion. This is up 359% from last year and up $317 billion from the end of Q4. Our cloud RPO grew nearly 500% on top of 83% growth last year. Now to the results using constant currency growth rates. As you can see, we've made some changes to the face of our income statement to better reflect how we manage the business, and so you can understand our cloud business dynamics more directly. So here goes. Total cloud revenue, that's both apps and infrastructure, was up 27% to $7.2 billion. Cloud infrastructure revenue was $3.3 billion, up 54%, on top of the 46% growth reported in Q1 last year. OCI consumption
She's so excited.
was up 57%, and demand continues to dramatically outstrip supply. Cloud database services, which were up 32%, now have annualized revenues of nearly $2.8 billion. Autonomous database revenue was up 43%, on top of the 26% growth reported in Q1 last year. Multi-cloud database revenue, where OCI regions are embedded in AWS, Azure, and GCP, grew 1,529% in Q1. Cloud application revenue was $3.8 billion and up 10%, while our strategic back office application revenue was $2.4 billion, up 16%. Total software revenue for the quarter was $5.7 billion, down 2%. So all in, total revenues for the quarter were $14.9 billion, up 11% from last year, and higher than the 8% growth reported in Q1 last year. Operating income grew 7% to $6.2 billion. We have also been on an accelerated journey to adopt AI internally to run more efficiently. I expect our operating income will grow mid-teens this year and higher still in FY27. Non-GAAP EPS was $1.47 in US dollars, while GAAP EPS was $1.01 in US dollars. The non-GAAP tax rate for the quarter was 20.5%, which was higher than the 19% guidance and caused EPS to be 3 cents lower. For the last 4 quarters, operating cash flow was up 13% to $21.5 billion, and free cash flow was a negative 5.9 with 27.
She just looked at the stock and was like,
of CapEx. Operating cash flow for Q1 was $8.1 billion, while free cash flow was a negative $362 million, with CapEx of $8.5 billion. At quarter end, we had $11 billion in cash and marketable securities, and short-term deferred revenue balance was $12 billion, up 5%. Over the last 10 years, we've reduced the shares outstanding by a third at an average price of $55, which is, at this point, much less than a quarter of our current stock price. This quarter, we repurchased 440,000 shares for a total of $95 million. In addition, we paid out dividends of $5 billion over the last 12 months, and the board of directors again declared a quarterly dividend of 50 cents per share. Given our RPO growth, I now expect fiscal year 26 CapEx will be around $35 billion. As a reminder, the vast majority of our CapEx investments are for revenue-generating equipment that is going into the data centers and not for land or buildings. As we bring more capacity online, we will convert the large RPO backlog into accelerating revenue and profit growth. Now, before I dive into specific Q2 guidance, I'd like to share some of the overarching thoughts on fiscal year 26 and the coming years. Clearly, it was an excellent quarter, and demand for Oracle Cloud Infrastructure continues to build. I expect we will sign additional multi-billion-dollar customers, and that RPO will likely grow to exceed $500 billion. The enormity of this RPO growth enables us to make a large upward revision to the cloud infrastructure portion of our financial plan. We now expect Oracle Cloud Infrastructure will grow 77% to $18 billion this fiscal year, and then increase to $32 billion, $73 billion, $114 billion, and $144 billion over the following 4 years. Much of this revenue is already booked in our $455 billion RPO number, and we are off to a fantastic start this year. Now, while much attention is focused on our GPU-related business, our non-GPU infrastructure business continues to grow much faster than our competitors. We are also seeing our industry-specific cloud applications drive customers to our back office cloud apps. And finally, the Oracle database is booming with 34 multi-cloud data centers now live inside of Azure, GCP, and AWS, and we will deliver another 37 data centers for a total of 71. All these trends point to revenue growth going higher. For fiscal year 2026, we remain confident and committed to full year total revenue growth of 16% in constant currency. Beyond fiscal year 26, I'm even more confident in our ability to further accelerate our top and bottom line growth rate. As mentioned, we will provide an update on our long-range financial targets at our financial analyst meeting at Oracle AI World in Las Vegas in October. Now, let me turn to my guidance for Q2, which I'll review on a non-GAAP basis, and assuming currency exchange rates remain the same as they are now. Currency should have a 3-cent positive impact on EPS and a 1% positive effect on revenue, depending on rounding. However, the actual currency impact may be different as it was in Q1. Here goes. Total revenue are expected to grow from 12 to 14% in constant currency and are expected to grow from 14 to 16% in US dollars at today's exchange rate. Total cloud revenue is expected to grow from 32 to 36% in constant currency and is expected to grow from 33 to 37% in USD. Non-GAAP EPS is expected to grow between 8% to 10% and be between $1.58 and $1.62 in constant currency. Non-GAAP EPS is expected to grow 10 to 12% and be between $1.61 and $1.65 in USD. And lastly, my EPS guidance for Q2 assumes a base tax rate of 19%. However, one-time tax events could cause actual tax rates to vary as they did this quarter. Larry, over to you.
Thank you, Safra. Eventually, AI will change everything. But right now, AI is fundamentally transforming Oracle and the rest of the computer industry, though not everyone fully grasps the extent of the tsunami that is approaching. Look at our quarterly numbers. Some things are undeniably evident. Several world-class AI companies have chosen Oracle to build large-scale GPU-centric data centers to train their AI models. That's because Oracle builds gigawatt-scale data centers that are faster and more cost-efficient at training AI models than anyone else in the world. Training AI models is a gigantic multi-trillion-dollar market. It's hard to conceive of a technology market as large as that one. But if you look close, you can find one that's even larger. And it's the market for AI inferencing. millions of customers using those AI models to run businesses and governments. In fact, the AI inferencing market will be much, much larger than the AI training market. AI inferencing will be used to run robotic factories, robotic cars, robotic greenhouses, biomolecular simulations for drug design, interpreting medical diagnostic images and laboratory results, automating laboratories, placing bets in financial markets, automating legal processes, automating financial processes, automating sales processes. AI is going to write, that is, generate, the computer programs called AI agents that will automate your sales and marketing processes. Let me repeat that. AI is going to automatically write the computer programs that will then automate your sales processes and your legal processes and everything else, and your factories and so on. Think about it. AI inferencing. It's AI inferencing that will change everything. Oracle is aggressively pursuing the AI, and we're not doing badly in the AI training market, by the way, but inferencing's bigger. Oracle is aggressively pursuing the inferencing market as well as the AI training market. We think we are in a pretty good position to be a winner in the inferencing market because Oracle is by far the world's largest custodian of high-value private enterprise data. With the introduction of our new AI database, we added a very important new way for you to store your data in our database. You can vectorize it. And by vectorizing it, by vectorizing all your data can be understood by AI models. Then we made it very easy for our customers to directly connect all their databases, all their new Oracle AI databases, and cloud storage, OCI cloud storage, to the world's most advanced AI reasoning models, ChatGPT, Gemini, Grok, Llama, all of which are uniquely available in the Oracle Cloud. After you vectorize your data and link it to an LLM, the LLM of your choice, you can then ask any question you can think of. For example, how will the latest tariffs impact next quarter's revenue and profit? You ask that question, the large language model will then apply advanced reasoning to the combination of your private enterprise data plus publicly available data. You get answers to important questions without ever compromising the safety and security of your private data. Again, I'd like you to think about this for a moment. A lot of companies are saying we're big into AI because we're writing agents. Well, guess what? We're writing a bunch of agents too. But when they introduced ChatGPT almost 3 years ago, what you got to do is have a conversation and ask questions. You weren't automating some process with an agent. You could ask whatever question you wanted to ask and get a well-reasoned answer with all of the latest and best information, and high-quality reasoning go along with it. Who's offering that to customers? We'll be the first when we deliver it and demonstrate it at AI World next month. That's what our customers have been asking for ever since the introduction of ChatGPT 3.5, almost 3 years ago. I wanted to ask questions about anything. And therefore, you need to understand my enterprise data as well as all the publicly available data. Then you can answer the questions that are most important to me. Well, now they can ask those questions. Back to you, Safra.
Thank you, Larry. Tiffany, please poll the audience for questions.
At this time, if you would like to ask a question, press star, then the number 1 on your telephone keypad. To withdraw your question, simply press star 1 again. We will pause for just a moment to compile the Q&A roster. Your first question comes from the line of John DiFucci with Guggenheim Securities. Please go ahead.
Thank you for taking my question. Listen, even I'm sort of blown away by what this looks like going forward. And this question, I guess, is sort of purposely open-ended. So, Larry and Safra, Oracle's become the de facto standard for AI training workloads, and you make money at it. And I have a lot of faith in that. But clearly, there's more here than just AI training. I know it's a big part of it. You talked about it. But can you talk about what else, a little more detail about what else is driving these pretty amazing forecasts?
Go ahead, Larry. I
Yeah,
mean, you were just covering this.
Yeah, well, it's a lot of people are looking for inferencing capacity. I mean, people are running out of inferencing capacity. I mean, the company that called us, I mentioned it, I think either last quarter or the quarter before, someone called us, we'll take all the capacity you have that's currently not being used anywhere in the world. We don't care. And I've never gotten a call like that. That's a very unusual call. That was for inferencing, not training. There's a huge amount of demand for inferencing. And if you think about it, in the end, all this money we're spending on training is going to have to be translated into products that are sold, which is all inferencing. And the inferencing market, again, is much larger than the training market. And yes, we are building, like everybody else, we're building agents with our applications. But we're doing much more than that. You know, no one's shown me a ChatGPT 3.5. Again, 3 years ago, 3 years ago, a little less than 3 years ago, when ChatGPT amazed the world, and you could simply talk to your computer and ask questions and get well-reasoned, questions based on the latest and most precise information, as long as you ask those questions about publicly available data. And there's a lot of publicly available data. But if you combine the publicly available data with the enterprise data, which companies really don't want to share, you have to do it in such a way that your private enterprise data stays private, yet the large language model can still use it for reasoning, so as to answer your question, like how do the latest tariffs or the latest steel prices or whatever affect my quarterly results, affect my ability to deliver products, affect my revenue, affect my costs? Answer those kinds of questions. To answer those kind of questions, we have to, and we had to change our database, fundamentally change our database, so you can vectorize all data. That's the form in which large language models understand information, is after it's been vectorized. And then allowing people to ask any question they want about anything. And that's exactly what we've done. But unless you have a database that is secure and reliable and linked to all of the popular LLMs, and we've done all of that, unless you have that, and you have to tell me who else has that besides Oracle. Unless you have that, it's going to be very hard for you to deliver a ChatGPT-like experience on top of your data as well as publicly available data. That's a unique value proposition for Oracle. And that's because, again, we're the custodian of all of much more data than any of the application companies. They have their application data. They measure their customers in tens of thousands. We measure our customers in millions of databases. So we think we're better positioned than anybody to take advantage of inferencing.
In addition, by the way, aside from just our GPU and all of that, we have become the de facto cloud for many of our customers. Again, they want to put some things in our public cloud or in our competitors' public cloud working with the Oracle database, but simultaneously, there are a lot of reasons why they want what's called either a dedicated region or cloud at customer. We give our customers so much choice that there's very unusual for us not to be able to meet a customer's needs in one way or another. And then, of course, we have every piece of the stack. We have the infrastructure, we have the database that you're going to hear a lot about as really the only reasonable store for data that you want to use AI models against. And then we have all of these applications that are just taking off. So we just have a lot of different layers. They're all moving in the same direction, and they all benefit our customers when used together.
Listen, my
let me
off.
just
Go ahead,
John. Don't mean to. You're going to compliment us, and I interrupted you. I apologize for being rude.
Listen, I was just going to say my hat's off to both of you. I have been doing this a really long time, and I tell my whole team, pay attention to this, even those that are not working on Oracle, because this is a career event happening right now, and it's just amazing. And I guess I'm just really happy for you, and congrats on this. It's amazing.
Thanks.
But a lot of work.
Thank
Keep
you.
doing it.
It's been a lot of work. And well, let me mention two other things I think that are actually shocking. We have gotten the entire Oracle Cloud, the whole thing, every feature, every function of the Oracle Cloud, down to something we can put into a handful of racks, 3 racks. We call it Butterfly. That costs $6 million. So we can give you a private version of the Oracle Cloud with every feature, every security feature, every function, everything we do for $6 million. I think the cost for the other hyperscalers is more than 100 times that. So we can actually give our customers cloud at customer, the full cloud at customer. And we have companies like Vodafone, and I'm not sure which companies I can name and which companies I can't. We have large companies that are buying basically their own Oracle Cloud regions. In fact, multiple Oracle Cloud regions, because they don't want to have any neighbors in their cloud. They don't want other companies in their cloud, but they want the full cloud. They want to pay as they consume. They want all the features, all the function, all the safety, the security. They don't want to have to buy it. They want us to buy and own the software and the hardware. They want us to maintain it, build the networks, supply all of that, and they just want to pay for consumption. We can do that at an entry-level price that's 1% of what our competitors can offer. That's one thing. Another thing. Let me give you one more, and I'll stop there. We also have the most advanced application generator of any company. It's interesting. We're an application company and a cloud infrastructure company. And therefore, we build applications. And as we build applications, we'd like to be more efficient. And the way to be more efficient is to build AI application generators. And we have been doing that. And the latest applications that we are building, we're not building them. They're being generated by AI. And we think we're far, far ahead of any of the other application companies in terms of generating the applications. So that's another very significant advantage we have. And of course, and it's funny, I made the comment that we don't charge separately for our AI and our applications because our applications are AI. They're entirely AI. The new ones. The new ones that we're building, they're nothing other than a bunch of AI agents that we generate that are linked together with workflow. That's all they are. How do you charge separately for that? That's every application that we have. But the applications are better, and hopefully we'll sell more, and that's the way we'll get paid for them. Thank you, John, for the very nice compliment.
Thank you, Larry. Thank you, Safra.
Thank you, John, for all these years following us so kindly also. Thanks. Great day. Probably time for another question at this point.
Your next question comes from the line of Brad Zelnick with Deutsche Bank. Please go ahead.
Great. Thanks very much. And I think we're all kind of in shock in a very, very good way. Larry, there's no better evidence of a seismic shift happening in computing than these results that you just put up. And Oracle has a near 50-year track record of navigating transitions and coming out on top. But as we think about enterprise applications, Investors are fairly pessimistic these days, and I'd love to hear your perspective. Where do you see this all going for the industry? Where does the market share go to the companies that don't have the database, that don't have the advantages that you have all the way down to the silicon? Is this maybe an extinction event? Be curious to hear what you think.
Well, I think we have substantial advantages because we are an infrastructure company and we are an application company. There are two things that happen. As an application company, we knew we had to start generating our applications. We just couldn't do it with armies of people anymore. We still need people, don't get me wrong, but the number of people we need is substantially less. And we can build/generate much better applications than we can hand build. And we've been working on these AI application generators for some time, and we're actually using them. But the thing is, we're not just building application generators. We're building application generators, and then we're building the applications, which gives us insights to make the application generator better. It's a huge advantage to be on both sides of that equation, both being an application builder and a builder of the application generation technology. The underlying AI application code generators. That's a huge advantage. Let me give you another advantage, which is often a disadvantage. We're very large. We no longer sell individual discrete applications. We sell suites of applications. We decided to go into the medical business against Epic, believing that we could solve much more of the problem because we're much bigger than they are. And by the way, we're much bigger than Workday or ServiceNow. And we're solving a larger portion of the problem. We're able to do all of ERP, then we can add all of CRM, but all the pieces are engineered to fit together. That makes it so much easier for customers to consume. So we think that being good at application generation, the underlying technology, makes us build better applications, enables us to build more applications so we can solve more of the problem. So the customers don't have to do all that system integration across multiple vendors. We can just build a suite where all the pieces are engineered to fit together. I think we have tremendous advantages in the application space. We have tremendous advantages in the AI inferencing space where we can, again, what we'll demonstrate at Oracle AI World next month is we've taken all of our customer data, all of it. And I want to go into all the details now. But you can ask any question you want to ask. Who's your salesperson? Who's the number one prospect in my territory? What product should I be selling them next? What are the best references for me to use to persuade them to use our product? You can get all of those questions answered for you immediately if you're a salesperson. The engineers can look at which features of Oracle financials are people making the most errors when they're using those features that I have to fix and make easier to use. You just ask the question because all of that data is available to AI models. We're the only one. Is there anyone else doing this? Not that I know of. It's a huge advantage.
It's an amazing day.
Thank you.
We look forward to AI World, Larry. Thank you. It's an amazing day for Oracle. It's a remarkable day for the industry. Thanks again and congrats.
Thank you. Thank you so much.
Your next question comes from the line of Derek Wood with TD Cowen. Please go ahead.
Great. Thanks for taking my question. I'll echo my congratulations on this momentous quarter. Safra, the fact that you delivered over $300 billion in new RPO in Q1, just really amazing to see. But it's going to require a lot of infrastructure build out. So could you provide a bit more context on how much CapEx and operational cost structure will be needed to fully service these contracts? How we should think about the ramp of these costs relative to the ramp in revenue over the next few years, and generally how investors should be thinking about the ROI on this spend?
Sure. So first of all, as I mentioned in the prepared remarks, and as I've said very clearly beforehand, we do not own the property. We do not own the buildings. What we do own and what we engineer is the equipment. And that's equipment that is optimized for the Oracle Cloud. It has extremely special networking capabilities. It has technical capabilities from Larry and his team that allows us to run these workloads much, much faster. And as a result, it's much cheaper than our competitors, and depending on the workload. Now, because of that, what we do is we put in that equipment only when it's time, and usually very quickly, assuming that our customer accepts it, we're already generating revenue right away. The faster they accept the system and that it meets their needs, the faster they start using it, the sooner we have revenue. This is, in some ways, I don't want to call it asset light from the finance world, but it's asset pretty light. And that is really an advantage for us. I know some of our competitors, they like to own buildings. That's not really our specialty. Our specialty is the unique technology, the unique networking, the storage, just the whole way we put these systems together. And by the way, they are identical and very simplified, and again, making it possible for us to be very profitable while still being able to offer our customers an incredibly compelling price. What I have indicated is that CapEx looks like it's going to be about $35 billion for this fiscal year. But because we're monitoring this, we're literally putting it in right when we take possession and then handing it over to generate revenue right away. So we have a very good line of sight for our capabilities to put this out and basically to just spend on that CapEx right before it starts generating revenue. But at this point, I'm looking at $35 billion for the year, and I think it could be a little higher, but I think, and if it is higher, it's good news because it means more capacity has been handed over to me in terms of floor space. And as you also know, we are embedded in our competitors' clouds. Again, all we are responsible for to pay for is, in fact, our equipment, and that goes right away. And there, we're moving ultimately to 71 data centers embedded in our competitors or / partners.
Very encouraging to hear.
Let me add a couple of very short things. One is we just turned over a giant data hall to one of our customers, and the acceptance time could have been as long as a couple of months. It was 1 week. It was 1 week from the time we quote officially owned the equipment, and they were testing it to the time they started paying for it. 1 week. So we have an extraordinary team that's doing an extraordinary job of making sure that we get the equipment working very quickly, and our customer can accept it. They want to accept it as fast as possible because they want to do the work. They want to train their models. And this one took a huge haul, took 1 week for acceptance. It was an extraordinary event. The other, we are a very large consumer of networking equipment, GPUs, etc. Because we are a very large consumer, we are able, I think, to get better financing terms from the vendors than some other people. So I think we have that going for us as well. I think we're going to do very, very well on the finance side. We have advantages there as well.
Great. Thank you, Larry. Thank you, Safra.
Of course.
Your next question comes from the line of Mark Mortimer with Bernstein Research. Please go ahead.
Thank you very much, Larry and Safra, and frankly, Team Oracle. Amazing and congratulations. I'd like to focus on the AI training business you've been winning. Could you please explain to us how Oracle can create enough of a differentiated moat to assure this business does not get commoditized? And how do you continue to drive strong earnings and free cash flow from the training business, even if training slows? I think people really need to understand that.
Well, I can do it with one sentence. Our networks move data very, very fast. And if we can move data faster than the other people, if we have advantages in our GPU superclusters that are performance advantages, if you're paying by the hour, if we're twice as fast, we're half the cost.
Yeah. Oh, that's tight.
Hard to beat that.
Impressive. I agree. Thank you.
Your final question comes from the line of Alex Zukin with Wolfe Research. Please go ahead.
Hey, guys. I really appreciate you squeezing me in. I originally was going to ask you if the new Oracle AI database really opens up the general enterprise inferencing market. And based on your script, it sounds like the answer to that question is hell yes. So I guess my follow-up question would be, how do you see that pacing happening over the course of the next few years? How soon after the introduction of the Oracle AI database would you expect, your enterprise customers, your sophisticated customers to really be open to interrogating their enterprise data in this fashion? And how does the current supply constraint environment stand in the way of that demand, or is it solving as we speak?
I don't know if, Larry, you want to cover it. You covered it in the remarks. Go ahead.
Go ahead. Okay. I think who wouldn't want that? I think everyone says they want to use AI. CEOs say they want to use AI. Heads of state, heads of government say they want to use AI. We've never had consumers like that. Historically, we don't deal with CEOs. Now we deal with CEOs. Now we deal with heads of government and heads of state on this because AI is so important. And letting people have, use AI on top of their data, that is what they want to do. But they didn't know how to do it securely. They didn't know how to do it, period. And then one of the big risks was, oh my God, I can't share my JP Morgan Chase can't share all of its data. Goldman Sachs can't share all of its data with OpenAI. They won't do it. Or XAI or Llama or Meta. They won't. It's got to keep it private. So we've got to keep your private data private. We've got to keep your private data secure. But we have to make it available for inferencing by the latest and best reasoning models from OpenAI and XAI and everyone else. And because we have the database, because we can vectorize all the data in the database, because we have very elaborate security models in our database, in the Oracle database, we can do all that. We can deliver all that. And then what we chose to do was with the AI database, was not only make sure we can vectorize all the data so it can be understood by the AI model, we then bundled it with all of the AI models. That's why we did a deal with Google. That's why we did all of these deals where, Gemini, you can get Gemini from the Oracle Cloud. You can get Grok from the Oracle Cloud. You can get ChatGPT from the Oracle Cloud. You get Llama from the Oracle Cloud. I could go on. So we bundled them together. So it's very easy for our customers to use these large language models on a combination, and that's what they want, is a combination of all of the publicly available data and all of their enterprise data, which allows them to ask and get answered any question they can think of, any question that's important to them. Everyone wants it. I think the demand is going to be insatiable, but we can deliver a lot of databases and a lot of AI across our cloud over the next several years. We're in a good position to do that.
And this is going to be one of the reasons that Oracle databases, which are still the bulk of the enterprise market by a lot, are going to finally move into the cloud. Many of them will move in the public cloud using the Oracle AI database, but many and the largest enterprises will want their own either dedicated regions or Oracle Cloud at Customer. And again, they can finally get the benefit of AI for their own data using any LLM that they want because they're all in our cloud too.
It sounds like very high margin AI revenue, guys. Congratulations.
Thank you. Thank you. Okay.
Thanks, Alex.
He's
A
so
telephonic
happy.
replay of this conference call will be available for 24 hours on our investor relations website. Thank you for joining us today.
I've never heard someone so happy during an earnings call. I mean, thank you very much.
This is the first time I've actually even heard her like talk for more than 5 minutes. She usually is. Larry does usually all the talking, and she always sends it back to Larry. But she wanted like the final word this time.
Yeah, I mean, incredible. And this really reminds me of the first Nvidia quarter where they grew 80-something% quarter over quarter, and everybody was like, "What the heck was?" No lobby music, thank you. Everybody was like, "What the heck is going on here?"
I mean, it is wild. Right now, I mean, that RPO is crazy. The question is now like, where do we go from here? And again, I think that's what many investors also question on the first NVIDIA calls, and we can continue to see the growth. I mean, Larry mentioned we're still in early innings. You still have like the robotics, all these crazy AI agents. But yeah, it's just at the same time so hard to kind of just grasp the amount of growth that we just saw.
Yeah, and I think I've seen net worth wise, I think Larry's just behind Elon right now. By the way, guys,
Yeah,
for those who don't know, Larry is 81 years old and he's still doing this.
That's wild.
That is crazy.
And for those that didn't do it, just make sure to hit the thumbs up and subscribe button because
Jose just hit 77,000 subscribers. So
What?
congratulations.
Thank
Ding,
you,
ding, ding, ding.
Ding, ding. I think it was like, if you did the math, it was like 30 billion below Elon.
Give or take.
Yeah. But it was crazy jump. It's crazy how rich they are. One day.
on paper.
On paper.
Because their companies are worth that much. They don't have it in their wallets, of course. But where is it? Here it is. So Elon is at 383, Larry 200
and that's before the growth,
yeah.
right?
So that's an extra 75 billion apparently. Pretty close. Pretty close.
Larry connected from his nuclear bunker in Hawaii. Yeah.
Man, the fact that Zuck is there and he's like the youngest by far of
I
them
guess
all.
the dinner did work, right? Because this was the dinner that I forgot who shared the story. Was it Elon or Larry who shared the story that they took Jensen out?
Both. Yeah.
Took Jensen out for dinner about 1.5 years ago to buy all the chips they can get.
It's funny because then now he mentioned during that earnings call that someone called them and said, we'll take everything that you're not using capacity wise. But yeah, I mean, of course, I'm not that surprised now. Not that I think about it, I'm not that surprised that they did not speak about an AMD or whatever in the call, because why would they speak about other companies when they just reported this thing? Any specific wow comments that were made?
Obviously right now the RPO, but now from the earnings call, any wow comments? The one that really I would like to listen to it again. I probably will listen to the call again, but when they mentioned that someone called them for some form of AI infrastructure and it took them like a week to kind of get it set up, and how they tried to build AI infrastructure a lot quicker than others. Um, I would love to maybe read that and kind of grasp it a little bit more. So, but the ability to build up that infrastructure pretty quickly, I think is definitely a strength of theirs right now.
Yeah, that moat question was an interesting one. And it's like, yeah, I could just say it in one answer. What did he say? It's like, we are faster and we're cheaper.
Yeah, he said their networking speed is extremely fast, and in inference and training, that's definitely kind of like a huge moat. Um, And the other thing, yeah, what Gene here mentioned, they did grow their capex to 35 billion, and they did mention it can grow even higher. I mean, we're just at the beginning of their quarter 1 for this fiscal year, so I would expect it to continue to jump. Maybe in quarter 3 we hear another update, but just a quarter ago they mentioned about 25 billion. So that's already about nearly a 50% growth, about maybe like 40% growth from last quarter. And I think again, I think we're going to see even larger. So 35 billion, still light work compared to maybe some of the other cloud players, but they did mention that they don't buy the land themselves, or they don't like to own the land. Maybe that's one of the reasons their capital expenditure is also a little bit lower than some of the other players.
Yeah, I mean, we did talk about the the debt issue this morning, but I don't think it's that much of an issue anymore when your RPO is at close to $500 billion, which again
I
is quite
agree. Was
crazy.
there anything that that really got your attention, Neil, outside of obviously the crazy RPO? And
Yeah, no, I think I mean, it was a very easy call, right? It was everybody was like salivating on those numbers. All of these analysts were like, congratulations. They were joking around. Safra was talking as if she was a guide at Disney World. So no, I mean, incredible. And I guess maybe not, because analysts are analysts. So I'm pretty sure that some analysts will always come out with some ridiculous reason, like, like the Seagate or Seaport or whatever dude that came out last week and said that Microsoft and Meta are reevaluating their capex spend or their AI spend. Yeah, sure, okay. Tell that to us now after we've seen this Oracle earnings report. I mean, this. We said it time and time again. People forget, but we're only 2.5 years in. Only 2.5 years into this AI wave. And of course, if you don't believe in this AI transformation, then fine. But if you do believe in it, then yeah, we're still super early. Like, technically speaking, other than models, not Victoria's Secret models, but AI models, we haven't really seen that much. Yes, autonomous vehicles are becoming more popular in the United States, but it's not mainstream yet. Healthcare, AI healthcare, all of that is not mainstream yet. Robotics, humanoid robots, not mainstream yet. And he said it, you can automate everything. Of course, then the big question is, how will this impact the jobs? It's either going to amplify people's jobs or a lot of people will be replaced, which I think it's probably going to be a mix of both.
I agree, Neil. I mean, I don't see how things like this make me more bullish for the semiconductor stocks and just the kind of AI infrastructure. I really believe that we're going to see Oracle try to make some deals with somebody. It could be CoreWeave, it could be Nebius, it could be all these other players. But with that type of RPO, they're going to need to meet the demand because they're not going to want their customers to go elsewhere. So I can see bullish for the overall sector. I've always considered myself someone very bullish in this space, but looking at numbers like that, it's like, am I just not bullish enough? Should I just go talk to the wife and say, hey, let's take out a loan for something? Because it's definitely early. I'm obviously not going to do that. And wife, if you're listening to it, don't worry, I'm not going to bother you. But yeah, it it gets me excited for the overall space. Again, I don't think it's always going to be a straight line right now. We're going to see certain articles, certain news, certain innovations that could create volatility. But in the long term thesis is still, in my opinion, pretty much intact. One question though, Neil, that I have is like, how can you provide? It's a great bearish question in my opinion. I've seen it. It's like you're showing all this strong, massive growth in RPO, but yet you missed on analyst expectations in both top and bottom end this quarter. The difference between an Nvidia quarter in 2024 is you actually saw the results, right? You only saw about a 12% revenue, 14% revenue growth. Is that maybe a little bit of a hesitation and maybe kind of just a little overexcitement right now? What are your thoughts about that? Even though we see this massive RPO growth, they even gave us the projections for the upcoming years. But why wouldn't we be seeing it now if it's really happening? You know. And again, I'm bullish, but I just want to. I agree. I see some backing behind that question and would love to hear your thoughts.
I mean, we are going to see it next quarter, no? And the quarter after that, and the quarter after that. So I guess it's just because these things take time and the way they recognize that revenue. Because I mean, analysts, okay, they missed analyst expectations for this quarter, but analysts completely missed the boat on what's going to happen next. So it's like, okay, we missed slightly one quarter, but look, we are now we're now at $500 billion in backlog, basically. You didn't expect that. We didn't expect that either. I mean, we, Jose and myself. So there you go. There you go. These things take time, and I mean, they basically laid out what's going to happen in the next couple of years, and there is upside ahead. You said before they will need to meet all of it, and so they will have to probably contact the likes of CoreWeave, Nebius, Iron, or whatever. I actually think we might maybe see a CoreWeave contract first, just because of the connection and the relationship later this year.
Don't make me smile too much, Neil. Don't make me smile. I mean, I've been thinking the same thing, but I jinx it if I say it. But if you said it, maybe you might have your touch. But I agree there, Neil, and yeah, I think the great thing is they gave us those numbers of revenue growth or their revenue projections in the cloud business. They expect 18 billion this year, a fiscal year. So I think at least we can track it. And if we see any major slip ups from there, that could be a nice red flag. It could be a great red flag indication. So I think now we can kind of take these numbers, put it in our research bucket, wherever we have that research bucket, and just kind of keep track on it to make sure that's what's we're going in that direction.
Yeah, Cadence. This is Cadence, right? CDNS. This one's down 3%. Maybe because of Synopsys. I don't know. Synopsys is down, 18.7. Sheesh. That's not great. Actually, a question for both of us. Based on what we just saw, what are your top 3 names to jump in right now to benefit from this? I mean, I can answer for Jose. He might answer for me. He's going to say CoreWeave. Mm-hmm. He's probably going to say CoreWeave for sure.
Yeah.
Me?
Oh, sorry.
Me, I don't know. I mean, I'm quite happy with what I have. But could I add to CoreWeave, Nebius, and maybe Iron or maybe an AMD or so here? Yeah, possibly. Again, I don't think I should be. People will say, "Oh, why don't you own Oracle?" That's a good question. Now, that's a good question, but I don't think I need Oracle in my portfolio because I have other names that will benefit from what's happening with Oracle, and so 3 names. I guess I'll just stick with Nebius, CoreWeave, and maybe an AMD if it does not go up that much, because I did buy last Friday, or maybe Micron, but Micron is yet to report earnings, so I'll wait on that a bit.
Yeah, Neil, I think this is, like you mentioned, I think for me the biggest ones I'm super excited about are the AI infrastructure players. I think those are going to be, and the reason is they're all small. I mean, even CoreWeave is still a $50 billion company. I think that's still pretty small compared to where it could be. Nebius is now a $27 billion company. I still believe these are multi-bagger potentials. So at least one of those out of those top three names would be PowerShell, AI infrastructure, AI stack, one of them. But then it does seem like someone in the semiconductor space. Obviously, Nvidia is the big benefiter, the benefits from this. But it's already a $4.5 trillion company. I believe it's gonna continue to beat the market before. So I would put Nvidia there or an AMD. But then there's a lot of smaller players in the AI space that I need to start to look a little closer into that can definitely benefit in forms of revenue growth a little bit more. But to me, I think at least the AI infrastructure space for sure. That's almost a no-brainer for me. CoreWeave is one that I've been really, really buying, and I think it's been the right move.
I don't understand how Oracle can cannibalize CoreWeave.
The only way I can see it is if Oracle uses all of CoreWeave, if that's what it means. Just how like CoreWeave kind of cannibalized
Core Scientific.
Core Scientific. Like that's like you're pretty much just my middleman. So hopefully that's what he means it, but in forms of like market, no, I think there's not enough chips right now. There's too much demand, and not enough power. More importantly, not enough power is the more important. And I don't think you can kind of eat up that market share. If you want to eat it, I think it's more just take the whole company and take their infrastructure with it.
This should be pretty bullish for energy players. Whether it's, I mean, nuclear will anyways take a lot of time, but Constellation Energy, I think is a name. I think Google has had an announcement with them.
Mm-hmm.
Yeah. Plus, what about the Vertivs of the world?
I mean, definitely, they're definitely seeing that traction. I mean, this infrastructure build out, and now with the current administration maybe eliminating some of the red tape in the infrastructure build out, you can see the growth of Vertiv and those a little bit faster than maybe a few years ago. So I can see why people get excited about the Vertiv. I'm looking for those big growers. Vertiv,
the big money, the big money players.
I think Vertiv is one of those like nice money growth and a nice stability, right? Because it doesn't matter. You kind of have that stability of whoever builds these data centers. Can it be a multi-bagger in a few years? I don't know. Can it outperform the market? Definitely. I'm looking for those multi-baggers. I don't know if I personally would put it for the Vertiv, but I definitely would put it as a market beater. And I already have plenty of market beaters. I'm getting aggressive, and I want the multi-baggers. I'm happy with my market beater portfolio. I want the multi-bagger portfolio.
I 100% agree with you. I 100% agree with you. This is your super chat from Virus Complex, which
we hope we can find some.
Yeah, but no, I think we basically said like this is why we are going. Because we have our established names in our portfolio, which is also why we've talked about TSMC, great company, but we don't see multi-bagger potential with TSMC today, right?
Yeah, exactly. Market beater for sure. TSM, market beater, but multi-bagger in the short term?
Yeah. The CoreWeaves, the Irons, the Nebius out there, or even if we want, I mean, I'll probably talk about fintech companies every single day, but these are the companies, if you find them, of course, on time. I'll give 2 examples. If you go check Dave and Sezel's stock, these things are up 5,000% over the last 2 years. And even today, I still think those could be multi-baggers. Same with Chime. So yeah, I am also, because I have my established names, I have my retirement portfolio with just the big guys, right? The Meta, Amazon, Mercado Libre, Google, Tesla. There is actually some Google there as well, because you cannot own enough of Google. But yeah, I think both of us are now in aggressive mode, which is quite interesting because people say, oh, you guys are crazy. We're at all-time highs. How could you go aggressive mode looking for multi-baggers? Why not be defensive? My simple answer here is, and you can give your answer later, is that, well, these companies have just huge runways ahead of them. They're still small, all things considered. Of course, Oracle is much bigger. Oracle, CoreWeave, Oracle as well, but CoreWeave is much bigger as well. And that's why we don't mind going quite aggressively in those names, even if the market is at all-time highs. These companies are early in their growth journey.
I agree, Neil, and I think you mentioned it really well. It seems like we did build our own base individually. You mentioned you have your fintech plays. We both been pretty heavy on Google, so I feel pretty safe with my overall positions of good market beaters. But now what I'm hearing from my big players, I followed Nvidia for a long time, and I don't know. It's this feeling, this gut feeling of like, I feel like sometimes when we research too much, we feel like the rest of the market knows what's happening, but it seems like they still don't. It seems like AI is I don't know. I really do feel we're still early. And for me, I'm happy with my base. Now I'm looking for those multi-baggers. And multi-baggers, not just random plays, right? Plays that come with that research that we have done. For me, we're like, right, I start off with NVIDIA, and then I created this triangle or funnel or whatever of researching what's next. And when I start, Roberto, thanks for the super chat here. Top names in your PowerShell do-it-yourself ETF. So a few weeks ago, I did kind of like I look at 15 PowerShells, Neil, and I told myself I was going to research more about them. But the more I started researching, the more it was like, there's no point in me trying to find the next one when I think I have the next one. And I think for me, that next one is CoreWeave. So I kind of like pulled away from it. In that video, at the end of the video, Roberto, I'm pretty sure you know, you remember it. I had like 5 that I picked. I still would pick with those 5 on the top overview, 5 or 6. I forget the name of them. But it was like, sometimes it's like when you have the one you really believe in, you kind of like really build that position. And for me right now, I am building that that position on CoreWeave. And it's why the reason I kind of stopped with that do-it-yourself ETF.
It's funny because on Sunday in my portfolio weekly update, I did put in a Peter Lynch clip where he basically talks about how he hates diversification. He calls it diversification. But then he goes into saying that if he sees 10 good stories, 10 good companies, he would buy all 10, which then you might ask yourself, okay, that doesn't make any sense. But it does make sense because it says, look, if the 10 stories are super attractive, then I'll buy all 10. Then along the way, one goes up, the other goes down, one management screws up, the other one has some macro headwinds. Then you start to drop one for the other, and your 10 names become 7 names, become 5 names, and might even become just 4, 3 names or whatever. And it makes sense. Just like you just said, you looked at a bunch of PowerShells and you came to the conclusion that, okay, they have great stories, they have some great potential as well. But to me, the better story is just CoreWeave. Simple.
Yeah, I agree. And it was mainly based on just the power amount that they have available to them, and obviously the partnership with NVIDIA. I think once I finish building this position that I want with CoreWeave, maybe I go back to it. But it's like I could be wrong, and that's obviously how this market goes right now. But I feel like I really found the one for me with this CoreWeave right now that if 1 year I regret, if in 1 year I would regret not going ham on this one right now and going through that ETF approach. And again, once I finish with that CoreWeave position that I want, I probably want to maybe start looking at a little bit more the PowerShells, but it would be very small positions.
I mean, that's probably the one that will buy the Florida house. That's probably the one that will buy the Florida house. CoreWeave and Nebius are not the same price. CoreWeave is worth $50 billion, I think. Nebius is at 25, 26 or so. Trajectory-wise, CoreWeave is still ahead of Nebius, which is also why they're also a bigger company than Nebius right now. Stock price, yes, they're very close. $100 per share, $95 per share, but they're not the same price company-wise. One is double the size of the other. We own both. I think, I know, maybe Jose doesn't own Nebius anymore. Maybe a tiny bit still.
No, I still do. But yeah, I would say it's more of a CoreWeave player. But I like both. I can definitely see both being winners.
Yeah, so he has a lot more CoreWeave and has Nebius. I have a lot more Nebius and I have CoreWeave. And I also have some Iron as well, and a little bit of Applied Digital, just because I don't want to leave Roberto alone in this play right here. Peter Lynch used the same, correct, which is why I told the story. I love Peter Lynch. It's my go-to guy. Very, very simple way of investing and simple way of explaining things. But yeah, by the way, now I learned something from chat that we can see the heat map pre-market and post. Who knew?
What did you change it? Oh, post-market, nice. Oh, pretty nice.
Yeah,
look at this. We learn. Well, Neil learned. Now I learned. Yeah.
Yeah. Mind blown.
Mind blown. Yeah.
But yeah, other than that, I mean, we're very happy. We are AI investors, basically. And the story just continues. Can we have some pullbacks? For sure.
For sure.
I think we might even have a pullback tomorrow if the CPI report is not what the market could expect.
We're super excited right now, so it means the market's going to kick us and humble us tomorrow.
But lucky for you, we will be back tomorrow morning before the market opens.
Lucky for me or lucky for them? Or for all?
For all. But I do want to address this again. This Russian thing. It's not run by a Russian. Who cares? Like there are Russians that work at Google, at Amazon, at Tesla, at Nvidia, at whatever. It's a Netherlands company right now, HQ in Amsterdam. So plus they kick ass because they built Yandex.
I do want to say the Microsoft deal kind of a little bit solidify a little of the. If that was a risk, I think Microsoft's customer can be like, if Microsoft is doing this, why should I be worried?
I mean, yeah. Plus, if they were delisted for so long and relisted only last year, it means that the whole restructuring is done. And yes, I mean, founder of Ethereum is also Russian. So, and it isn't the founder of Google like isn't he also like half Russian or something? But anyways, we will be back tomorrow morning. So please join us tomorrow morning before the market opens.
Please.
And if not, then I guess we'll see you next time. But I think we'll see most of you tomorrow morning for a nice little market open. CPI report comes out before, right? I think, or later. I think before the market opens.
And talking to me about macro stuff. Do you know who I am, Neil? Anything about that goes?
Yeah, but
I don't know.
Maybe you've learned.
Know. No,
maybe
I haven't. I don't care. If it's not chips or AI, I don't care.
This guy. Anyways, everyone, time to go to sleep for me. For those that are on their way home.
Maracas. Oh man, I have. I'll bring them tomorrow. My little one actually has little maracas. Maybe I should. We'll start using them for the market open.
This is a good plug. PPI then CPI. I thought it's CPI tomorrow, PPI on Thursday. I think that's usually how it goes. But
Well,
anyway,
we'll find
see.
out tomorrow.
Yeah, exactly. We'll find out
all
tomorrow.
right.
Tune in on the
Boom,
next
much.
episode of Dragon Ball Z. See you all
Done.
tomorrow.